Hey Collier family, it's the middle of the year, which means it's time for our mid-year outlook. It's been an interesting start to the year, including the Nuggets even winning an NBA championship. Today we want to talk about what's happened so far this year, our projections for what's going to happen in the second half of this year, and of course we'll throw Will to the Wolves again with another Devil's Advocate piece. With that being said, let's get started. You may remember from our 2023 Outlook video that one of our primary concerns for this year was inflation. Now, inflation has trended down to start the year, but it has not reached the Federal Reserve's target. This means that the Federal Reserve has had to raise interest rates a couple times this year. They've communicated that they're willing to do so throughout the remainder of the year. Now remember, higher interest rates are designed to slow down the economy. We also had an eye on corporate earnings. Now, corporate earnings were trending down to start the year. In fact, they went negative in the fourth quarter and the first quarter this year. So we're continuing to watch corporate earnings for any rebound or continuation of that. On a positive note, the labor market has remained amazingly strong. So this leads us to the question of, are we going to see a recession this year or not? And honestly, the indicators are split. We look at indicators such as the Costco indicator that looks at, are people buying expensive meats or are they transitioning to cheaper meats? In good times, people are buying steak. When they feel like tightening the budget a little bit, they switch to chicken. And just last month, the CFO from Costco said they've seen that transition in the purchasing. But we've never had a recession when the labor market's this strong. So are we going into a recession? The answer is we're kind of split. Now, how does this affect the market? Let's talk about the tale of two markets this year. The markets in 2023 truly have been a tale of two markets. It reminds us of the story of the tortoise and the hare. If you remember the story, the hare comes out running the race extremely fast right away, while the tortoise kind of just takes his time methodically throughout the race. We feel like this is best demonstrated by this chart from Charles Schwab. What we're looking at here is the returns through June 6th of this year for the largest 500 companies in the US. In coral, the top 8 performing stocks for the year. In gray, the other 492. What you'll notice is throughout the year is the divergence between these two groups has gotten greater. On June 6th of this year, the top 8 performing stocks represented over 99% of the total return of the index. So if one was just to look at the performance through June 6th of this year, we'd say all we ever want to own are these 8 stocks. They're far and away the best stocks in the market. However, if we pull back the lens and look at these same 8 stocks starting last year in 2022, what you'll notice is some of them haven't even got back to where they started the previous year. So this is the tale of two markets, and it's important to take this in context when we see the market up for the year. When you look underneath, it may be telling a different tale. Now, this type of narrow leadership has happened plenty of times. It's neither a good or a bad thing. But much like the story of the tortoise and the hare, this type of leadership in one group of stocks is not sustainable. One of two things historically has to happen. Either the stocks that have led for the year need to give up those gains and come down to the rest of the market, or the rest of the market needs to join the rally and come up to the gains of the rest of the stock. So what does this mean for your portfolios for the rest of the year? As your financial partners, it's our job to constantly be evaluating the current market environment. And in our opinion, not much has changed this year. You may remember from our 2023 Outlook video, we stressed the importance of rational investing this year. To us, rational investing is owning quality companies that have strong cash flow and consistent revenues. Now, we maintain our defensive tilt, but what's rational to us going forward would be broadening our exposure to the 492 stocks that have yet to participate in this year's market rally. Now, we did a Devil's Advocate piece to start the year, and in that piece we talked about how the markets could return to irrational exuberance where money flowed to unprofitable companies. Some may argue that that was the first half of the year. That's not our base case for the second half of the year, but just for fun, let's see what Will has for his Devil's Advocate.
Hey Collier family, welcome back to another Devil's Advocate. Now, just as a reminder, the Devil's Advocate is where I take all the hard work, research that Brandon and I have put together that we diligently believe in, and I just say the opposite. Why? Because it makes you laugh. So let's talk a little bit about last Devil's Advocate. Last Devil's Advocate, I walked you through, the market didn't have to remain rational. The market could be irrational, and I would argue that it has been. Brandon just spent some time walking through all the risks that exist to a recession, the softness in the labor market that's starting to pull through, talking through inflation, talking through the Federal Reserve raising interest rates, but you know what he never said? Artificial intelligence. And right now, that's all the market really cares about. It doesn't have to be rational and think about the risks that exist on the horizon. It only cares whether or not you use ChatGPT on a daily basis. Think about the market as that uncle of yours that believes in conspiracy theories. Right? He's a blast at Thanksgiving, don't get me wrong, but if you try and get an argument with him using facts or conjecture, you're really not going to get anywhere, and that's where the market sits today. All it cares about right now is artificial intelligence. And I think, well, I don't really think, but the devil advocate thinks that that's something that could continue.
Well, that's it for our mid-year update. Thank you for watching. As always, if you have any questions, the team is available to you. We look forward to seeing you in the second half of the year, and go Nuggets.